Alright guys, welcome back to my channel. I know it's been a while, so thanks for your patience. I was in the process of moving, but I'm back now and I'm going to be creating more content much more regularly. So today's video is going to be on protraction profiles. And as you can see, this is a concept which I actually have a PDF for on my Twitter. I'll link that below where you can learn a bit more and kind of get into more of the fundamentals around how I utilize these protraction profiles in my trading. But essentially, the topic of this video is going to be understanding how we can look at session dynamics to predict and anticipate what will happen during the day's move. For example, from London to New York is what I define as session dynamics, in which I study three types of protraction profiles. So before we get into it, let's kind of define what protraction means. Protraction is just another way of simply saying manipulation. And if you can look at this general schematic here, I think this is the single best way to kind of understand or rationalize what protraction is. When we consider a daily candle and we look at the dynamics internally of this daily candle, what we will notice is that each daily candle will print an open, low, high, and close. And if we're bearish, we would expect to see something similar with an open, high, low, and close. That is to say, if we can understand the daily draw on liquidity, higher or lower, i.e. if we're going to be expecting a bullish or bearish day, we should be able to predict and analyze price as a function of this opening high-low close of this daily candle. Meaning, if we zoom into these dynamics, what's happening internally within this daily candle formation, we should be able to say that we want to position ourselves like smart money within this wick. But more so, we want to say that if we're bullish, we want to ensure that this wick, this buy wick for the day, has been put in. Therefore, we do not want to trade the manipulation lower. We would instead prefer to trade the expansion higher. That's exactly what the topic of this kind of mini lecture today is going to be, and we're going to be looking at how we can analyze London's price action to position ourselves in New York to get on top of this daily expansion. Now, the one thing I want to mention is that if you take nothing away from this video, I want you to remember the following statement. This entire field of study, right, protraction or intraday profiling, is essentially an algorithm, and it goes as follows. If London does this, then New York does that. This is a binary logic. We are looking for specific patterns in London of price action to then make inferences about New York delivery. And as you'll be able to see in my protraction profile PDF, which I will link, there is exactly a protocol that I follow for each of the protraction profiles I'm going to mention in today's video. So you can go back and refer to that in addition to this video to really fill in all the details or any gaps that I miss in this short video. So let's jump right into some charts and try and look at this dynamic. If London does this, then New York does that. Again, we're going to need some ground rules for engaging in protraction, and that's going to be the following. We define protraction, I can write this out. We define protraction as manipulation into a greater than 1 hour PD array, which can be a swing low, a fair value gap, an order block, a breaker block. But for the purpose of today's exercise, let's just look at ERL and IRL, swing lows and inefficiencies. We also want to then see out of that manipulation into that higher time frame array, a SysD or market structure shift. And ideally, we also want to see an SMT at the lows or highs. In the cases of a bullish case, right, we're going to see it at the low. In the case of a bearish case, we're going to see it at the high. Now, this isn't necessary, but an SMT is an even better if. So there we go. We now have a kind of working definition of what we define protraction as, and that is going to be a manipulation away from our draw on liquidity into a higher time frame PD array. We then want to see price change state of delivery, shift structure, right? And then we want to potentially even see an SMT at the lows. Now, the difference between the protraction profiles I'll teach you, which are classic protraction, delayed protraction, and the Judas profile, which is void protraction, are all going to be a function of the x-axis, and that is going to be time. So as we can see in this PDF, right, which we'll refer to throughout this lecture, we are going to define classic protraction as a move into this higher time frame PD array, this manipulation, between 12 and 2 to 3 a.m. Eastern time. That power of 3 development looks like this: an Asian accumulation, a manipulation before or during the London session, an expansion during the London session, and a continuation during New York. That would be our classic profile. And again, there's rules to engage in that for New York session. That's why we study London. Now, the second profile will be delayed London protraction, wherein we see this move, manipulation, right, forming this wick of the day in a classic buy day between the hours of 2 and 3 and 8 a.m. Now, this power of 3 development profile looks something like this: Asia accumulation, London manipulation, and then New York expansion. So notice how in a classic scenario, New York is continuing off of the reversal trend of London, right? Because London already manipulated. Whereas in the delayed protraction case, New York is actually reversing the direction of London, keying off of that higher time frame level, and then pursuing to form, or to draw towards the draw on liquidity for the day, which we're assuming, I guess, in this schematic to be bullish and higher. Now, the final example, and again, those are rules of engagement, which you can find in the PDF. And the final example is going to be our void protraction profile, wherein we do not see a meaningful manipulation during the London session, i.e., when equities opens at New York Open, usually around 9:30, but sometimes during a news folder, we will see London lows be taken as a Judas swing during New York. Now, this power of 3 development profile is very different. It looks like Asia accumulation, London expansion, then New York manipulation, followed by the true expansion of the day towards the draw on liquidity. Being able to recognize the conditions that will form a Judas swing will allow you to position yourself to get long after the manipulation occurs, as opposed to being on the other side of a violent equities open against the draw on liquidity. We see this quite often. And the reason why this happens is because, again, we have a statement, right, that we want to be utilizing. If London does not manipulate, i.e., the draw on liquidity is this high, for example, then we expect New York to manipulate before distributing. However, if London manipulates, there are conditions for New York continuations higher. Okay, so that was a lot of talking, and I hope a lot of it makes sense. Maybe watch that a couple times and pair that with this PDF I made. It really simplifies things. Let's get onto the chart and look at an example of each one of them. And I want to actually do this as a live walkthrough with you guys. I haven't prepared anything in advance because I don't want this to be something that's hindsight and cherry-picked. I want us to be able to utilize this information in this PDF to retroactively, right now together, go in and actually identify what protraction profile we are looking at for the day. So let's take a look, let's start with today's price action. As you can see, today's price action was very interesting because we liquidated our all-time highs right here. And we actually did that, if we zoom down a time frame, right, during the New York session. So what we can actually see in hindsight now is that this day here is presenting us a classic or delayed protraction point of view for New York. As we can see, right, what happened in the London session? Well, in the London session, right, let's hop onto our higher time frame. Like we said, we wanted to find something on the hourly or greater. We actually came in to this. Stick on the hourly. We came in, right, to this area of price action. Now, there's a lot of wicks in here, so it's not extremely clear as to what PD array that is, but maybe we can see something more clearly on this ES chart where we see price trades in to this fair value gap right in here, and we come back into the range or a discount of this dealing range right around the OTE level or a discount level before expanding higher. Now, what we expect to form, and the reason why this profile here isn't optimal is because we've already liquidated our highs before we get a retracement. But looking at our protocol, when we get a classic protraction, we expect to see a New York optimal trade entry breaker continuation, something with a fair value gap as well. So as you can see, this is actually a delayed protraction coming in to right around 5 a.m. is where we form our low. So that would be this profile here, delayed protraction. And the way in which we want to engage this is with a fair value gap, right? We want to reverse against this low resistance liquidity that was created during that London move lower. So we can see we have a fair value gap in here on the hourly chart. So we'll mark that out. Okay. We'll also mark out our fair value gap level on ES. Can also take a look at Dow potentially. I'm just going to use ES and NASDAQ for now. And now we want to drop down to the 50-minute chart and actually see exactly what the price action delivered. As you can see, during this London session, we have this delayed move lower into the optimal trade entry of this range, right? So we're manipulating lower. And now we expect London, or New York rather, to expand. We use news drivers as equity, volatility injections. We come back into our fair value gap, which is our condition. We form a key level SMT inside of our fair value gap. Right, that's our SMT there. We also want to note that if we form any key level SMTs in the London protraction, which we can clearly see, we form another SMT, right, which matches one of our conditions for protraction. So these two SMTs are giving us an indication of bullish order flow, and then we can trade a continuation long. Now, I'm not going to go into my charts and mark out the whole market maker model. I have lots of videos on that. We're just going to stick with this, little lecture on just protraction profiles. But in here, there is an opportunity to get long and trade into this level. Now, it's not ideal. We already liquidated all-time highs, right? However, there is still a valid protraction profile that emerges. So let's keep looking at these profiles and go through the days. Again, we're not going to do any of this in hindsight. It's all going to be in real time. So let's take a look at this day here. This to me, right, this profile on Wednesday, I actually wouldn't analyze because we have FOMC in the afternoon. So all of the price action before FOMC in this area is low probability to me. Generally, I stay away from the mornings of FOMC if you guys know how I trade. So let's take a look at another day. Maybe let's go to a week that we're not so familiar with. Let's find a random week. Okay, maybe let's look right here. This is like a nice classic sell day, right? This would be exactly the inverse of what you're seeing right in here, right, where we have a bearish candle instead. So let's define our conditions of protraction. What we would expect to see is some manipulation during the London session higher into a point of interest. Well, let's take a look at our ES chart, and I can clearly see that we've manipulated into this previous day high. So this previous day high is going to be let's use the rewind function just so we can clearly see the whole day. And we can flip up a time frame. Okay, even better, we can go up a couple time frames, and you can see that we've manipulated into these 4-hour highs. We've also manipulated into this 1-hour fair value gap. So I'll mark out just this level right here as a key level. We'll label it a key level on the higher time frame. Now what we want to do, right, is look for any key level SMTs at that high, which is going to structure or frame our protraction as valid. So as you can see, we form. I'm not entirely sure if ES ends up taking out that high. It does. Let's check the YM potentially as well. Okay, so we can see we have this divergence between the YM, ES, and NASDAQ, which are our three intermarket related correlated assets. So that's very interesting for us to note. So what we want to do is observe that we have a divergence at this previous day high, which is going to form our SMT divergence. And now what we want to do is wait for our market structure shift in SISD. Again, we can look at this on several time frames. Here you can see we have an hourly MSS, an hour, and a very, very clear, I think, 15-minute SISD in here. So I'll mark out both, right? I'll mark out this area here as my SISD. And if you want to be consistent, stick to one time frame. So let's use the 15-minute chart, for example, just so that we can see more candles. We also want to look again for time frame alignment of our market maker models. Again, this all is in context of market maker models, which are all my other videos cover. But essentially, we want to be looking, for how we're framing a sell side delivery, potentially into these lows could be a target, right, for the day. However, that's not the context for this video. We're just looking at the protraction profiles. So, as you can see, we have our market structure shift, and we have our change in state of delivery. Now, what is the expectation? First of all, let's look at what time this happened at. This happens, right, this move higher begins at 2:15, and it caps off at around 4 a.m. So I'm going to define that, right? Again, we're not looking at strictly these times. I'm going to define this as a classic protraction because we can see this manipulation happens before a London expansion lower, right? Essentially, what we're doing is we are forming, right, this high of the day, just inverse this, right, before breaking down and giving us a leg lower. In this case, you'll see it's a leg higher, but just reverse this for a bearish candle. So that's a very, very nice observation we have about London price action. So what are the rules of engagement? Well, we go here and we see that this is our power of 3 development profile. We expect New York to continue from the London expansion. How can we key off of a New York level or a London level? Well, let's look for an optimal trade entry breaker, right, to continue the next leg lower. And as you guys know, I will always say that a breaker is not high confluence unless it's accompanied with a fair value gap, because fair value gaps are one of the most important PD arrays that I consider in my analysis. So I will draw out this 15-minute breaker in here, right? And I'll maybe put this in orange. And let's see if we have another higher time frame fair value gap as well. We also have, right, this could be our fair value, our breaker on the 1 hour, and we have this very nice 1 hour FVG. So these are my overlapping PD arrays, right? The breaker and the fair value gap make it a high quality breaker. And you'll also see on our 15-minute, we also have, right, this fair value gap and this fair value gap in here. So maybe I can just mark out and refine that area on the 15 just to here. Okay, fantastic. I now have my area of interest. This is going to be my M15 SIBI, right? And now what I want to be able to do is key off of this level for a New York continuation lower. So as price trades back into here, what do we say what level it should be at? Roughly, right, in discount, hopefully at an optimal trade entry. Well, as you can see, I know it's a little bit hard to see. Let me put this away. You can see price comes right into our beautiful 0.705 area, which is going to be our optimal trade entry, right? And then that is where we key off, right, and we move lower. So to engage this again, that's probably a topic for another video, but you can see, you can wait for this first distribution and then take, right, if we're framing a market maker model, I'll do it quickly. We have our smart money reversal up here. I'll make that nice and dark red. This will be our smart money reversal up here. Then this is going to be our first stage of accumulation, right? Or our low risk entry will be right here potentially. Then we have our first stage of accumulation. So we can get involved right in here in this inefficiency. That now the market's already tipped its hand and shown a willingness to move lower. And price comes back in right at equities open to offer us another distribution leg lower all the way into our draw on liquidity, right? You can see this fourth deviation is our terminus. We can go up a time frame. We can even try and pinpoint exactly where this projection block is forming, potentially at this point of interest right here, right? This propulsion block in the market on the hourly. But like I said, that's framing market maker models, not really the purpose of this video. This is how we use protraction to now have an edge in the New York session to study and then see price deliver as expected, right? SMT at a key level, time of the manipulation, first leg of distribution, reaccumulation, second leg of distribution, boom, right? So in the context of our market maker model, we can see this protraction profile feeds beautifully into that concept as well. Let's keep going. We'll do one more example and then we'll see what profile is. Maybe I'll find us an example of a Judas swing. Now we can see we have a lot of high impact news this day, and London offers us a Judas swing, right here. But I want to find one that maybe even is a little bit clearer without all that very whipsaw price action. Okay, let me find a nice example of a, there we go. Here's a very, very clean looking Judas swing profile. Now again, this is the one I have kind of illustrated here, and we can see that London displaces away, or displaces towards rather, the draw on liquidity before offering a meaningful manipulation into a higher time frame PD array. Therefore, if London does not manipulate, we expect New York to. That is the basis of a Judas swing, right? That is going to be a stop out of the London lows. A Judas swing is where the intermediate term low created in New York is the low of the day, not London. So let's study specifically this day and see if we could have expected this move lower. So first of all, let's first of all begin by saying, where do we think price is going to be drawing into on the day? Let's go to our higher time frame and see what the draw on liquidity would be. Maybe let's look at a daily chart. It's not incredibly clear there. Maybe on a 4-hour. There we go. So we can see that we have this 4-hour fair value gap right in here. I'll mark that out. And that actually is going to be the target, or what we refer back to for our manipulation during the London session. So we have bullish order flow, right? We have, let me see down here. Let's see if we can justify why we wanted to see higher prices. I'm looking for any SMTs at the low that would tell me that this fair value gap internal level here is going to be supporting price higher. This is our key level, right? Daily fair value gap. And I want to see if there's any internal SMT formed between, here we go. So we see this SMT that is formed between the Dow and our NASDAQ, which is going to be telling us, right, we're keying off and we're going higher. Fantastic. So now I have a bullish bias for the next day. And now I can assume my draw on liquidity, let me get rid of this. See my draw on liquidity, right, to now be the external range highs potentially, but on a lower time frame, let's take a look and see. Potentially, I want to see these premium level highs taken out in the market, okay? And why do I say premium level highs? I'm simply drawing this dealing range, and I'm looking for any liquidity that rests above this 50% mark, right? This is going to be referred to as our premium liquidity in the market from this dealing range and this smart money reversal in this daily fair value gap, which we can label now. Okay, fantastic. So what we're looking for, right, is to see if London manipulates lower before expanding higher, because a classic buy day would offer some sort of London retracement followed by a New York continuation, right? This would be a template for a classic buy day. However, because we fail to see London manipulate in any meaningful way, meaning London begins to push up towards our draw on liquidity, we can reason that New York will offer a discount reaccumulation, taking out the London lows and order pairing these lows, right, this sell side liquidity, as the low of the day before eventually expanding towards the high. Now, I assume, without looking, that based on the narrative of this price delivery, we may have seen an SMT right up here. So I'm going to draw that in, and let's confirm that that actually occurs. As we can see, right, we actually do get that SMT. And again, that's just from me, seeing price action many, many times and understanding that the draw on liquidity was likely these highs, and ES, of course, did liquidate those highs. Okay, so let's study, right, this Judas swing profile. As London reacts and moves higher, not reacts, as London moves higher and does not offer any sort of premium reaccumulation, right? It does not tag this fair value gap, for instance, which would have been a very nice level for London to come into. We can see, I'll mark that out. That would have been a nice level for London to react on. But as we can see, we move, let's go down to a lower time frame. We start to displace immediately higher, and we keep moving higher and higher and higher, and then eventually, right when New York opens, we are offered this Judas swing lower. And this Judas swing is exactly what we would expect before a delivery to the buy side, because in the day so far, right, if we look at our true day open, which we can define as the midnight opening price. Let me draw that out for you guys as well. We have not been offered a meaningful level, right, of accumulation and discount below this price. So what New York will do is it will order pair this consolidation low in the market before let me mark that out as purple, before expanding higher towards the draw. Exactly what we're seeing in this schematic. Again, if you go to our PDF that I created and we look at our Judas swing profile, you'll see this is exactly what we expect in this power of three development, right? Asia accumulation, London expansion, New York manipulation, and then expansion. And we can see tons of examples that look almost identical, right? Look at this schematic in here with the engineered liquidity at the London lows before a smart money reversal in New York keying off of the equities open. And here's another example on a chart of what you're seeing. Well, look how similar this looks, right? Engineered lows, we swing up, right? Inducing longs into the market before rallying against them, order pairing this low down here, and then distributing higher. And you can even see that in this PDF, I provide you with a template to get involved, right? How do you want to get involved? Turtle soup entries. So you want to be turtle souping these lows with the expectation that a higher time frame PD array rests below them. And as you can see very clearly, we have our 4-hour fair value gap. So not only are we keying off of these London lows, we're tagging this inefficiency. So that combination of confluences, right, of price confluences, is going to allow you to take a high probability turtle soup entry. And as you can see, once we turtle soup these lows, right, price rapidly expands towards our target, and you would be offered the single best entry in the day. Obviously, the SMT here would be a warning sign for you to get out of your position because, ES has already liquidated those highs. Now, in addition to that, what we can look for is a confirmation SMT at this Judas swing, because remember what I said. We define protraction. In this case, the protraction or manipulation happens in New York, not London, as this manipulation. We want to see an SMT, right, potentially at the lows. It's not necessary, but it definitely adds confluence. So we can see here that there is a very meaningful SMT at these London lows between ES and the Nasdaq. And this SMT is also giving you a secondary confirmation that this turtle soup is high probability. So when we're getting involved in this turtle soup, right in this area, let me get rid of this line. When we're getting involved in this turtle soup right in here, we now have high probability conditions because we not only have, right, a Judas swing template for the day. We are expecting lower prices, but we also see this key level SMT and 4-hour inefficiency. Now, the nice thing is that we're also offered a reaccumulation entry inside of this BISI, right, this buy side imbalance, sell side inefficiency. However, what I tend to do on days like this, and my students can attest to that, is I like to get in right at this turtle soup entry and then pyramid it if I'm offered another opportunity. Now, again, this is a fantastic trade in and of itself. We don't get, as you'll see in the schematic, we do not expect to get a SysD or market structure shift when trading the Judas swing profile. We expect the entirety of this swing to be reversed against, and as you notice, your market structure shift wouldn't happen until above here, in which case there's not much meat left on the bone for you to engage to this high. You want to really be utilizing this intraday profile, right, of if London does that, New York does that, to get involved in a very low risk scenario entry. And yeah, this is going to be offering you one of the best entries in the chart, and this blueprint is defined super well by the conditions, right, of the Judas swing protraction profile. This intermediate low, as you can see, remains the low of the day, and an intermediate low, obviously, for those who don't know. T-Trades has an amazing video on this. This is going to be our short-term low. When we start off, we have a short-term low. And once we put in a short-term low to the left and right, this now becomes our long-term low or intermediate-term low. I'm going to call it a long-term low because it's inside of a point of interest. And yeah, this is essentially the qualification with market structure for what you're seeing with the Judas profile. So yeah, I'm going to wrap up the video there. Don't want to make it too long. Please ask questions in the comments, DM me. They're always open. I'll link my Discord as well in the comments. It's a free channel for you guys to ask questions and kind of engage with me. I try and answer as many questions as there as possible. But yeah, let me know what you think. I'm going to throw this protraction profile PDF in the comments as well, the link to it from my Twitter. Go ahead and download that. It's also free. And yeah, let me know what questions you have, and looking forward to making some more videos in the future, guys. Take care.